Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Matthew Spoke, the CEO and founder of Moves Financial. Moves is the all-in-one banking app designed exclusively for gig workers. Matt, thank you so much for joining the episode. I'm really excited to chat with you and dive deeper into what you're doing at Moves and kind of capitalizing on the gig economy. But before we dive into all that, what were you doing before you started the company?
Well, first, I'm pumped to be here. I'm a big fan of the podcast. I love sort of the inside look into founder stories. So I'm glad and sort of humbled to be able to share mine. But yeah, quick backstory. I started Moves about 2.5 years ago. So just not super deep into this journey. It's my second company. Before this, I had built a company in the Web3 sort of crypto space back in 2016. So I was in that space for about 4 years. And then at the end of 2019, started getting a lot of my attention sort of shifting towards the gig economy, problems that were happening in this space, and just a domain that I knew very little about, frankly, and particularly not only gig workers, but also like financial services in the traditional sense. I came from spending a bunch of time figuring out financial services in the non-traditional sense in crypto, but I wanted to learn something new and put myself to a new challenge. But if you rewind far enough back, before 2016, I was a CPA. So a pretty maybe different backstory in terms of how I got started. And one day decided to make the leap from a world of public accounting to trying myself out as an entrepreneur. And it's been fun ever since. So
Yeah, what was that? What was the catalyst behind making that decision?
well, I mean, I think from the very beginning, I remember before I even go to university, telling my parents that I was going to go study accounting. And my dad's reaction was like, "Are you sure? Like, that doesn't really seem like it fits your personality or what we would have thought you would." But, I didn't really have a good framework to think about my education or my goals, other than I was good at math. Numbers made sense to me. I wanted to go into business, but I wanted to be able to apply sort of like my skills in math to that. And accounting, frankly, I didn't even know quite the difference between accounting and finance at that. So it was an area to just like sink my like education, my 4 years of education into. At that point, once you study accounting in university, you're on this like automatic path towards like working in an accounting firm, becoming a CPA, getting designated. Very quickly, I realized it wasn't what I wanted to do with my career, but I figured, I started down this path. It's a valuable skill set and knowledge to let me finish. And then once I'm finished, I will figure out what I want to do next. And finishing,
Yeah.
I live in Canada. So in the Canadian context, generally means you got to spend about 3 or 4 years after school to complete sort of your professional certification. And then you just sort of figure out what you want to go do next. So I knew I was leaving. It wasn't quite obvious to me that I was going to go become an entrepreneur, but a whole bunch of stuff sort of lined up and
Yeah.
stars aligned for me to take a risk there.
During that time, did you have an idea of becoming an entrepreneur or were these skills kind of leading to you or experiences? A lot of founders I speak to, they either kind of have that itch that's inside them, even though they're gaining the experience, they can use that to build skills, or it's almost like an aha moment. Like, okay, I think this is the compelling reason that I should transition and pay attention to this feeling that I have kind of full time. Was there any of that in there?
I don't know that I was ever like, call it naturally groomed to be an entrepreneur. I think it was like a slow realization. So for one, while I was working in accounting early in my career, my brother was the entrepreneur in the family, had a whole bunch of startups that he was starting over the course of a couple of years. He tried starting a couple of startups, and then where I could, I always sort of helped out on their bookkeeping, their finances, their just like basic stuff, setting up their payroll system. But I always had this like passenger seat watching my brother sort of like take the risks that I had not yet taken in my career. It also so happened in those early days or those later days in my couple of years in accounting is when I discovered Bitcoin for the first time. And again, my brother, same brother, is the one who sort of introduced me to the concept of Bitcoin, and pretty quickly became fascinated with that. I think my interest in Bitcoin ultimately led to my interest in entrepreneurship. I don't think it was the other way around. I worked in an industry of very, very traditional finance, very, very traditional financial reporting, big public companies, things like that. And it was pretty obvious to people in our industry, and I think it still is today, that like the way that financial markets are built is pretty archaic. There's a lot of blind trust placed into how companies report their numbers, their performance, their annual filings. Obviously there's regulations and layers and auditors and things like that. But there's still a lot of room for error. I mean, some of the case studies we studied in school were like the massive systemic frauds of Enron and WorldCom and companies like that were like massive failures in the way that our financial systems were built. Bitcoin caught my attention in that context. I mean, so this is 2012. My brother tells me about Bitcoin. I start going into a rabbit hole. I ultimately didn't leave and start focusing on Bitcoin professionally until 2014. While I was still working at Deloitte, I started pitching Bitcoin as the end all and be all, as like this annoying employee who just like would not let the partners at the firm ignore me on this topic. I was like, hey, we're not doing anything on Bitcoin. This is going to be huge. And eventually they sort of let in and they let me go and explore the area. I spent a year and a half in my last year and a half at Deloitte leading sort of a pretty broad Bitcoin / crypto research team. We went and sort of built a bunch of prototypes. We used to go meet with a bunch of startups. We went to a bunch of conferences. I think it was in that year and a half that the concept of becoming an entrepreneur became a lot less scary to me, because I started interacting with entrepreneurs on a much more regular basis, and they didn't feel all that different than me. They didn't feel like they had some magic secret ingredient that I didn't. And so in that process, I think the scary factor of sort of quitting your job seemed less and less scary after a little while in that space.
Yeah. What ingredients did they have that you also had?
I mean, frankly, I think I used to say this a lot in my first company. To me, it was almost a naive stubbornness about what you were doing and what view you had, like what perspective you had on the world. Most people that I came across in the crypto space, myself included, we had primarily one thing in common. We were young and inexperienced, right? So most of us were not even 30 years old. Most of us had very short careers, if any careers at all. And there was part of the reason that I think this industry attracted folks like that is because you didn't have a deep understanding of like how the world works outside of this like new magic internet money industry. And so this was like the first time you ever thought about money and finances and financial systems was in the context of crypto. And I think there's a certain amount of naiveness or naivete and inexperience that you need to believe that your crazy ideas are realistic. And like, if you're too experienced, ideas that seem too far out of the box just feel like they're completely unattainable and you don't even try. And I think, young folks starting businesses that don't know the challenges and the obstacles they will run into are more likely to take the big risks because they don't actually know what the risks are, right? So they're sort of blindly going into it. But then what happens is that once you run into that obstacle, if you're creative and resourceful and you surround yourself with intelligent people, you solve it. And then you get to the next obstacle and you solve it. You sort of, the big, hairy problem feels more and more solvable because you're just solving it one step at a time. Whereas the other sort of more experienced risk averse person looks at the end goal and they're like, that's impossible, you can never get there. So they don't even try. Right. So that to me was like the biggest takeaway is like, hey, most of these people are like 24, 25 years old and have never had a job before. If they could do it, why can't I do it? Right. So
yeah. Has crypto kind of turned out to be what maybe you thought it was going to be when you first started working on it? And if so, what was your prediction? And if not, how is it different?
Yeah, I mean, yes and no. Like when I started paying attention to the space, Bitcoin was sort of the only game in town. I think Bitcoin is very much on track to achieving its promise. I think when the world is going through the amount of turmoil that it's going through right now, as much as people like to throw stones at Bitcoin because it's got volatile market prices, and if you invested in Bitcoin 6 months ago, you're probably not doing so well right now. I think the underlying macro thesis of Bitcoin is proving itself in the way that the world is sort of transpiring, the world events are transpiring. I still think it's going to take time for that to really show up in people's lives. But I think like the macro thesis could not be more correct. Yeah. Bitcoin was created again at a time when financial markets were imploding, when the world lost confidence in our banks. I think the first block in Bitcoin is a bank going under, right? So I forget the exact headline from that first block. And like, we're sort of seeing that all over again, right? So we're almost refreshing our memories as to why Bitcoin was so important. So on that side, I continue to be super, super bullish. On the broader themes of crypto and everything else that's sort of come out of this industry, I think there's goods and there's bads. I think, frothy industries where money comes easily attract all sorts of different types of actors, that it's tough to stand out and do good things when you're surrounded by people that are there for the wrong reasons. And that's sort of what jaded me. I spent 4 years in that space with my own business and about a year and a half before that while I was still at Deloitte. And in the last year, I really felt a sense that like, the motivation that I felt going into the industry had been like sucked out of my sails. I just couldn't find a clear path forward in terms of like what impact this was having, why the work we were doing mattered at all to regular people. It just felt like we were playing into the hands of speculators and sort of like gambling markets effectively. Sure. I think there will be good coming out of this industry. I just think it takes time for those filters to sort of like filter the good from the bad.
Yeah, yeah. Before we move into moves and what you're doing there, how long do you think all that filtering is going to take until we have adaptability and scalability, and also have it really reach people who, just are the average person, rather than, those who are doing it for a creative or investment reasons or gambling reasons.
Yeah.
I don't know if a ballpark figure, but how many years or months?
Yeah, I think there are some real valuable things that have come out of this industry already that are already
Yeah,
having an impact. And I did talk to you about one of them in the context of moves, because sort of part of the story of why I went from focusing on crypto to focusing on moves. I'll sort of try to paint that picture for you. So I do think that there are real valuable examples in the crypto industry today that are already starting to impact people's lives in meaningful ways. I mean, Bitcoin has its own stories. It has its own sort of like relevance, especially in markets where you have extreme lack of confidence in national currencies and in governments, fiscal policies, things like that. Maybe less so in more established Western countries like the US or Canada or Western Europe. But I do think there are places in the world where Bitcoin is already an incredibly powerful tool. And then in the rest of the crypto space, maybe broadly like the Web3 or the DeFi space, I think there's some early examples. I mean, I think they are all very early. Over the next 5 to 10 years, I'd expect to see more of this play out at scale. The markets, the market pressures that we're seeing right now in like traditional equity and debt markets, I think crypto provides like an interesting alternative rail to some of those problems. How people get access to mortgages, how people finance their car, et cetera. And it's just like there are companies now starting to bridge those gaps. There's some really cool concepts. Part of the thing that got me excited about building moves around like, how do you build ownership or the concept analogous to ownership into regular everyday consumer products? So there's some really cool companies out there that I'm really inspired by. Eco.com out of Silicon Valley, Brain Trust. There's some Audius, some of these companies that I think have built real things with real value for real customers, but they're still the exception. And so, five more years, we'll see more of those. 10 more years, I think it'll become the norm, but it's not going to happen overnight.
Yeah, yeah. Going to moves, I know you mentioned that you started to pay attention to the gig economy and realized that there was a lot of problems that needed to be solved. But what caught your attention about the gig economy in particular while you were, building in crypto and working within that space? Rather than doing something kind of, I guess, adjacent to that, you switch gears into something that I think a lot of people know about. The gig economy, we see it physically, whether we're ordering or whether we're working on the other side of the app. I've had the pleasure of doing both, and it's been an interesting experience on both sides. But what caught your attention to start working within the gig economy space, and what particular problems were you fascinated about that you wanted to start working on?
Yeah, I mean, same sort of thought as why I think young people and inexperienced people are so good at becoming entrepreneurs. I feel the same way about like my initial views on the gig economy were very naive and were very sort of like unfounded, but I had this gut feeling that what I was learning in crypto, this idea of sort of like democratized, decentralized ownership, could be applied to established and existing industries, and particularly established industries where they were very like tech enabled and tech first industries.
Yeah.
So, if I sort of really boil down like what I think the takeaway of the crypto and Web3 industry is this idea of like aligning economic incentives of multi-stakeholder platforms or ecosystems, right? So, and the best place I could sort of identify that outside of crypto was the gig economy. The gig economy is this really interesting beast where you have customers ordering food or ordering rides and needing TaskRabbit and da-da-da-da-da. You've got workers enabling these services by providing their time and their skills. But you have sort of a misalignment of incentives. You got a group of capital providers and shareholders that fund companies like Uber and Lyft and DoorDash and others. And they take a lot of the lion's share of the value out of those industries. And effectively, I mean, and not to their criticism, because I think this is sort of a natural way that businesses operate, but they will pay gig workers exactly enough to keep them around, but no more. Right. So there's no economic long-term alignment or incentive for a gig worker to really feel compelled to help grow the industry. And so my original question, coming from like a crypto angle, and this is very much not what we're building as a business today yet, but my original question is like, hey, what would the gig economy look like if gig workers owned it? Or at least if gig workers owned a large portion of it? And how would we get there? Would we get there by launching a competitor to Uber that happened to be tokenized and where you were handing out these like assets to drivers as they onboarding? Or could you sort of like Trojan horse yourself into the existing gig economy and find a way to like bring some of those concepts to life? And so that's where we started. We said, hey, we want to build a product for gig workers that aspires to give gig workers give gig workers control and ownership in the gig economy. How we get there, what products we need to build along the way, like that sort of became clear later, but that was the original thesis.
Yeah. Well, tell us a little bit about the traction. Where is the product now, and how is it starting to answer those questions and to, kind of complete the objective of like, giving them the ownership, or at least part ownership back in terms of whether it's their work or their skill set or kind of their activity and energy that they're spending on working. And you're right. It's this weird alignment of necessity. And I think as, COVID and as just the world becomes a little bit more dispersed and things are accessible by technology, that it's going to, this ecosystem of gig working is just going to become, this ever expanding organism. So how are you enabling them to take that ownership back?
Good question. And like to give sort of your listeners a sense of scale, like depending on how you measure the gig economy today, we're talking about on the low end, 20 million, on the high end, 50 to 60 million people in the US that define themselves in some way as gig workers. The reason that's such a broad range is because lots of people have different definitions for the word gig work, right? So if you're a freelancer online, you might think of yourself as a gig worker, you might not. If you drive for Uber, it's pretty clear you're a gig worker. If you deliver for DoorDash, but there's some sort of blurrier ones in the middle. So it is a massive segment of the labor market and growing. Over the last 10 years, even if you take out COVID from the equation, it had been consistently growing over that period of time. COVID was this like, supercharged growth in the gig economy because people all of a sudden couldn't go to the grocery store. They couldn't go to restaurants. So they started using these services more and more. I think we'll start to normalize a little bit now that COVID is sort of behind us. Maybe there's some new consumer behaviors that have been sort of entrenched, like how frequently we order on DoorDash every week. But generally speaking, I think this is going to continue to be a large segment of the labor market. Why that matters is this is a segment of the labor market that interacts with their, quote unquote employer in a completely different way. They are not employed by these companies. They don't get access to any type of safety net, benefits, insurance, or generally like employee protections, right? So if you think of a company with a workforce, they generally have an HR department. They care about your well-being. They care about your mental health. They care about your, are you saving for retirement, all these things. Or in some contexts, there's a union playing that role. If you're like in a more traditionally unionized industry, gig workers sort of fall in the cracks. They have no one looking out for their interests. Most of them also don't just work for one company. They don't just drive for Uber. They drive for Uber and for Lyft, or they do DoorDash and Grubhub, or they're spread out of time. So that was like the original observation. We said, hey, that's going to create a huge mess when you start thinking about, hey, 20, 30, 40 years from now, these people need to retire. Their kids need to have funded educations. They need to make sure they've got medical insurance in case they get sick. None of those things are being thought of today, right? So these people are operating on like, a day-by-day basis to like pay their gas and buy their groceries. Nobody's helping them plan for the long term. And, as much as it matters to the individual gig worker, it's like this big systemic question for the economy. Say, fast forward 20 years, what happens when 50 million people don't have a safety net? You end up with this massive cost on the overall American economy, right? So that's where we decided to focus. Say, hey, like, how do we build a safety net around gig workers? And then in the process of building that safety net, how can we elevate them to being less of a commoditized labor and more of like a participant in the economics of the gig economy, right? So to give you a real simple sense of like what our product is today, we're threefold. One, we're a bank account. So we offer full service banking to gig workers. They move their direct deposits from any app that they work on. We support 19 apps today. Most of our customers are on 2 to 3 apps in a given week. Some customers as many as 15 apps, some as few as one, but they, their deposits come into their Move's bank account. Within that, we also give them access to credit. They generally have a hard time getting access to credit through traditional banks, but we understand their income really well. We see how consistently they've earned historically. And so that unlocks a certain credit product for our customers. And then thirdly, we built out this reward program that is sort of the first part of this ownership thesis, where we give gig workers fractional stock in the companies that they work for. So easiest way to explain that is like a DoorDash worker getting access to DoorDash stock. Every time they use their Moves account, every time they refer a friend, every time they effectively do their daily work, they're earning small amounts of DoorDash stock. And if they drop for Uber, they're earning small amounts of Uber stock. And so that today is it's a live existing program. Eventually, we'd like to scale that up to be sort of probably like the front end of our pitch. Right now, the front end of our pitch has to do more with banking and credit. Eventually, we'd like it to be more of like, we call this part of our strategy, the Moves Collective, saying, hey, like join the Moves Collective. There's power in numbers. You might only own one stock in Uber, but we've got a million other customers who also own one stock in Uber. So we can collectively influence Uber to make decisions that benefit us, right? So we want to sort of play this dual role of not only being like a financial services company, but also like a shareholder activist where we're out advocating for these issues on their behalf.
Yeah. That's fantastic. And there's so many questions that come to mind with what you're working on. One being with, with the application and everything that you're working on, how were you able to build around the gig worker needs? What was that building process like to give you the insight on what to focus on?
Yeah. I mean, initially, and to give you a sense, I started the business in February of 2020. The first month, we're like, oh, let's just get into as many Uber cars and order food and just talk to as many gig workers as possible. We walked around on the streets in Toronto, talked to people standing in line waiting for delivery pickups as DoorDash couriers down to the back of Ubers, just talking to gig workers. The pandemic hit in March, so that derailed a lot of our ability to do that the same way we were before. But we still found sort of creative ways just to get in front of gig workers. It turned into like inviting people to like paid Zoom interviews where we would pay you $50 to come talk to our team and just tell us about your day, tell us about what's frustrating, tell us about how you manage your money, et cetera. Frankly, it was through those conversations that the like obvious pain points started to appear. So one of the most obvious that I didn't appreciate going into this was that your average gig worker, as I said, works for more than one app, and your average app requires you to use a specific banking product to earn your pay on that app. So if you drive for the average Uber driver uses an Uber debit card to earn their Uber pay. They're not required to, but most of them do. And then most of them sort of go down this path where they're like incentivized to use this Uber debit card. Lyft has one. GoPuff is rolling one out. Amazon has one. DoorDash has one. Instacart's rolling one out, et cetera. So what that meant is if you were working on 2-3 apps, it was not uncommon for you to have 2-3 different banking cards in your wallet, earning like a third of your income here, a third of your income there, a third of your income here. Just like starting point was like a really stupid way to manage your money. Like you need to pay your rent out of a single account, but you have money in 3 different accounts for no reason. And so we're like, okay, well, can we consolidate that into a single product? There was no app in market, banking app, that was like a direct to consumer banking product that was not branded by Uber, Lyft, DoorDash, Grubhub, whatever. And so we're like, hey, we want to be the standalone brand for gig workers. And we don't care where your income comes from. We don't care if you used to work for Uber and now you work for Lyft and next week you work for DoorDash. Like it doesn't matter to us. But it does matter if you use these other banking cards. So that was sort of step one. Yeah. And then we sort of went further and further from there. And the more we talked to customers, the more they told us about other problems they had. And that sort of like laid out a roadmap for us.
Yeah. Well, you mentioned this idea about credit and building credit. And I had another founder who was helping others build credit in creative ways. For instance, they were doing subscriptions and adding that as a way to input that data into the federal credit system. How are you doing something similar in terms of just, inputting data? Are you kind of having your own credit score system that you've built internally? What does that look like? Because I think, first of all, credit is it's so hard if you don't have access to it to then get access. And then if you have any infraction, it's so hard to rebuild that score and kind of reestablish your reputation. What are you doing and how are you using credit in a creative way that we haven't seen within the gig economy?
Yeah. So right now it's pretty simple. We offer our own credit product based on our own internal risk sort of score. Yeah. So we don't look at your credit score and we're not helping you get access to credit products elsewhere. What that does mean though is that it's limited. Like all we're able to do is we do advances from $25 to $1,000. $1,000 advance in the context of a gig worker can be a significant amount of money. I mean, like the use case that we were originally most interested in was during COVID, people had these like big gaps and interruptions in their pay because they had to like isolate at home if they got exposed to COVID or something like that. We're like, well, what does a person do if they're forced to stay home, but they can't earn money that week because they need to get it in their car to earn money? So we wanted our advance to be like, hey, we'll be the bridge. We'll be this like backup cash advance in case you end up in one of these scenarios. We found people using it for like self-isolation, people using it because their car broke down and it was in the garage for a couple of days, so they couldn't be on the road. But that's only a certain segment of problems, right? Like those problems up to $1,000, there's a lot of problems there in your sort of weekly, monthly schedule. And we can do that very well with very managed risk. And we don't look at your credit score and we don't report to the credit bureaus. We don't send you to a collection agency if you don't repay us. Like it's all sort of managed inside the product. What we'd like to get to is we'd like to be able to unlock more credit products, either ourselves or allowing you to get access to credit products by improving your credit score eventually. So we have looked at things like credit building. We don't do anything that interacts with the credit bureaus, but I think there's probably a short-term plan to do that. We're talking about something in 2023 that might unlock like a new feature set around credit building. But I think we first want to better understand like, hey, where's it most being used? Some of the problems we experienced with our customers were like really, really obvious low-hanging fruits. Like it's rarely someone trying to get approved for a mortgage, which is a big credit problem.
Yeah.
But it's often somebody wanting to prove to their landlord how much money they make to be allowed to get a lease. And like, that's a really simple problem to solve. If you've got all of their earnings data and all of their sort of like income profiles, then we can give a landlord confidence of their income in a way that an Uber driver would have a hard time doing. Cause like what we were hearing a lot is like, oh, I take a screenshot of my Uber app, my DoorDash app, and I send these, and like landlords are looking at this saying, hey, I don't know if this person sort of has consistent income, but we could show that over a year, 2 years, 5 years, you've had extremely consistent income and sort of give that to you as like a tool to be able to unlock a lease. But
Yeah. Yeah. Incredible. What are some of the biggest risks that Moves faces today?
I mean, like with any startup, it's a balance between like how much does it cost us to deliver our product to our customers and what's our revenue potential on that customer. So,
Yeah.
Broadly speaking, I'd say that that's as true for us as it is for any relatively early stage company where we're still ironing out kinks in our business model. We're still trying to make sure that the business operates as optimally as possible. I mean, to give you a sense, we've got, 20, 30,000 customers using the app. We need that to eventually become this is a market of millions of customers, but a lot of it is tied to like unlocking new capital from venture capital investors. And to get to that next round of venture capital, you need to be able to prove that the metrics in your business and the unit economics are sort of trending in the right direction. So financial services is a complicated space. I think twofold. I'm glad I came into this industry with no prior knowledge because it forced me to think about problems and first principles. But there's also a lot of stuff that you take for granted, but is actually really complicated under the hood of how a debit card works, how payment rails work, how payroll works. And like we've had to effectively learn how all this stuff works so that we could build a product that actually has a chance of being economically viable. So that's probably the biggest thing as we think about our business.
Yeah. If everything goes well, what's the long-term vision for Moves?
I mean, I have it on my wall just to, as like an anchor. We have this like sort of company declaration, we call it. And the title is 100 million gig workers later. And I think that's really the aspiration. We see ourselves solving a problem that's not just American, not just North American, but global. What I would love to see is that this concept that we call the Moose Collective becomes sort of synonymous with the gig economy. The same way that, I mean, you live in West Hollywood, so you might be familiar with this. I mean, I always use a silly example of like, hey, if you want to be an actor, you got to join the Actors Guild. If you want to be a gig worker, you're going to have to be part of the Moose Collective. And being part of the Moose Collective is going to be this like entry point into the gig economy. It's going to be where you get your safety net. It's going to be where you get your pay. It's going to be how you manage your benefits and your insurance, and it's going to be how you earn ownership in these companies as you work for them. And that part is like a little bit more like analogous to maybe like a stock option plan if you were a traditional employee. So that's the aspiration. I mean, we've got a long way to go in the US. In the next 3-4 years, we've got our eyes on 1 million customers. Probably 3 years would be like the right time frame. And then from there, I think the sky's the limit.
Yeah, no, it's incredible. And I'm so excited about not only you, but other companies similar to you who are offering different incentives to those who are using the application, their technology. Not only do you enable them to do their normal job more easily and effectively, but you also are rewarding them with the stock options that you mentioned to further encourage their ownership of their work. And I'm excited to see where Moves is going to go and in the direction. And I always like to ask this question from our founders that are on the show to kind of not only do some selfish research, but also to give the audience more research to do themselves. But I always like to ask, what books or people have influenced you the most throughout now or in your career?
Yeah, books. Well, one very specifically relevant to sort of our thesis as a business, a book that I read a couple of years ago called The Rise of the Working Class Shareholder. Really, really fascinating, sort of dives into what happens when employees start buying shares in the companies that they work for, what changes in the dynamic between management and employees. That set out a lot of our thesis. So love that book. It's not really about the gig economy. It's more about like, what happens when every Walmart employee decides they want to be a Walmart shareholder and like what changes. And so there's some really cool ideas that came out of that. People, I'll say I've been pretty inspired by, there's one specific venture capitalist in the Web3 crypto space, Jesse Walden, who I follow his writing and his thinking a lot. Jesse talked about the ownership economy, how sort of the future is built on sort of tokenized ownership models. And I think there's just a lot of really cool opportunities to really expand on that idea in various industries. And I hope ours is one of them. So
Incredible. Well, Matt, thank you so much. I know we're at time and we could talk for, I'm sure, another 30 minutes, if not more, but I'm excited not only where Moves is at now, but where it's, the future is headed and the success. And congrats on the current success, and best of luck on future success as well. But last little bit, I always like to give our founders time to give their plugs. Where can we support the idea? Where can we be part of the Moves Collective? Give us your LinkedIns, your websites, your Twitters. Where can we find you and support?
yeah, I mean, check us out, movesfinancial.com. Pretty straightforward how you'd spell that. And then you can follow me on Twitter at MattSpoke, MattSpoke. Talked a lot about what we're doing as a business and as well as some other stuff. So I'd love to find you there.
Awesome. Well, Matt, again, thank you so much for joining the show, and I hope you enjoyed yourself.
Thanks, Julian. Love it.